Let's talk about taxes for expats. And today's conversation, I want to share with you everything you need to know if you are an expat and you want to know more about taxes. Okay. So here's an overview I want you to pay attention to. The big question is, do expats have to pay U.S. taxes? Now, remember that when we talk about an expat is someone who moves from their native country and settles abroad, right? And American expats must file a federal tax return and possibly pay U.S. taxes if they earn above a minimum income threshold. And so they are typically eligible for an automatic 2-month extension to file, but not to pay. So it's one of those things where, depending upon where you are at, the IRS gives you some kind of leeway in terms of the delay that you have to, the deadline you have to actually comply with, but you have to always pay, okay? Now, the IRS has special rules that allow American expats to lower their taxable income. Let's talk about that. So if you are an American expat, someone who moved from the U.S. and now lives abroad, you will need to file a U.S. tax return if you earn above the minimum income threshold, okay? But that minimum income actually changes every year. So this gross income thresholds typically amount to the standard deduction amount for your filing status and age. These amounts are set each year by the federal government and are designed to actually index with inflation. And the standard deduction, along with other available deductions, reduces your income to determine how much is subject to income taxes. So generally, if you don't have a specific type of income that requires you to file a return, such as self-employment income, you will not need to file a tax return if your income is less than your standard deduction. So this is really important. Let me give you an example here. For 2023, you typically don't need to file a tax return if all of the following are true for you. You are under age 65. You are single. You don't have any special circumstances that are required to file, like self-employment income, and you earn less than $13,850, which is really the standard deduction for a single taxpayer in 2023. Okay, so this is how the situation actually shifts up. So when we talk about American expats, they have to file a federal tax return if they earn foreign income. Generally, and this is a big criterion here. Generally, you must file a tax return if you earn foreign income above applicable income minimums or a minimum of income that requires you to file a tax return for other amounts you earn, such as self-employment income. Now, the U.S. is one of 2 countries in the world where taxes are not based on residency. So the other country is Eritrea. So therefore, if you are a U.S. citizen or a U.S. resident alien, you will be subject to U.S. income taxes regardless of where you earn the income. So that said, while you may need to file, you may not need to pay any U.S. taxes. The IRS uses a series of tax items to lower or fully reduce your foreign income tax obligation. So this is really cool. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. Now, let's quickly answer the big question about American expats having to file a state income tax return. So I've already established that you need to file a federal tax return. Yes. What about a state income tax return? Well, whether you need to file a state income tax return depends on whether your state of residence requires you to file a state income tax return, right? The rules of your state and whether you have earned or received income originating from that state. So every situation is different. If you're in New York, if you are in New York, if you are in Florida, if you are in California, if you are in Chicago, if you're in Illinois, every state has different rules, okay? It's possible that you need to file a state income tax return while living abroad, but you should consider consulting with a tax professional who specializes in expat tax matters for your state to be sure. You can also let us know in the comment section here. Our team will get back to you if you ask a question. You can let us know where you are at, your state of residence, and we'll let you know what kind of situations you have, okay? Now, generally, when you are no longer a resident of a state or no longer earn or receive income originating from the state, such as with rental property, you typically don't need to file a tax return for that state. Pretty clear, right? However, if this happens in the middle of the year, then you might need to file as a part-year resident. How do you file taxes as an American expat? Well, you can file your taxes in one of 2 ways as an expat: electronically, so that's called e-filing, or through the mail. So filing electronically has grown to be the most popular method to file, representing over 90% of all returns received by the IRS for 2023-2024 returns, okay? And so the IRS prefers e-filed returns because they offer more accuracy, avoid processing delays, and speed up refund delivery for taxpayers. And nonetheless, the remaining portion of taxpayers prefers to file taxes through the mail, and the government has no problem with that as well. So regardless of how you prefer to file taxes, the basic process for preparing and filing your taxes is actually the same. So you calculate your gross income, right? Pretty straightforward. You claim all applicable tax deductions to determine your taxable income and your tax before credits. You apply available tax credits if any. You calculate your tax liability and compare this against payments you made during the year to determine how much you owe or can expect to receive as a refund. And then you file your tax return with the IRS. Pretty straightforward. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about taxes for expats. So when are expats taxes due? So it's one of those things where you got to be aware of some key dates, and to avoid potential penalties and interest, you want to file your expat taxes early. So your U.S. expat taxes are due on the same federal tax due date as U.S. citizens and U.S. resident aliens living in the U.S. So that's April 15th or about that age, so mid-April. So it's one of those things where, now, one thing I need to say, if you are a U.S. citizen or a resident alien living abroad on the April due date, you are granted an automatic extension to June 15th, okay, to file and pay your federal income taxes. And the same also applies if you are in the military on duty outside the U.S. You don't need to request an extension. So if you take advantage of the automatic 2-month extension, you should still try to pay any tax that is due by the original due date to avoid accruing interest on the outstanding balance. Okay, and it's one of those things where you have to see what really works for you. Now, one thing I need to say here is that if you need additional time beyond the automatic 2-month extension, you may request an additional extension to October 15th by filing Form 4868 before the automatic 2-month extension due date. So if you request the 6-month extension and fail to pay your taxes by the original filing date, you will owe interest on any unpaid tax amounts from the original due date on the return. So it's really important to keep that in mind. And so basically, there are penalties that expats pay for failing to file or paying taxes. So if you fail to file your tax return by the original deadline, or the deadline granted by the automatic 2-month extension, or if you fail to file Form 4068 requesting a full 6-month extension, it's very important to file your taxes as soon as possible, because filing an extension automatically pushes back the tax filing deadlines and protects you from possible penalties from failing to file your return in a timely manner. If you fail to file your return on time, you generally encounter late filing penalties that amount to a rate of 5% of the amount due with your return for each month that you are late. Okay, each month. So it's important to keep that in mind and always file your taxes as soon as possible. Now, as an expat, how can you reduce your tax liability? It's so you have a foreign income tax exclusion. You also have a foreign tax credit or a foreign tax deduction. Okay, so there are two. Those are the two ways to actually reduce your tax liability. So foreign income tax exclusion. Well, American expats most commonly claim the foreign earned income exclusion to exclude all or a portion of their foreign earned income from their U.S. taxes. To qualify to claim the foreign earned income exclusion, the foreign housing exclusion, or the foreign housing deduction, you'll need to meet all of the following qualifications. So your tax home is in a foreign country, you have foreign earned income, and you are one of the following. So a U.S. citizen who is a bona fide resident of a foreign country or countries for an uninterrupted period that includes an entire tax year. A U.S. resident alien who is a citizen or national of a country that the U.S. has an income tax treaty in effect, and who is a bona fide resident of a country, of a foreign country or countries for an uninterrupted period that includes an entire tax year. And if you are a U.S. citizen or a resident alien who is physically present in a foreign country or countries for at least 330 days, 330 full days during any period of 12 consecutive months. And so you also need to pass either the physical presence test or the bona fide resident test to claim the foreign earned income exclusion. Partial year exclusions are available if you have recently moved to a foreign country or returned to the U.S. mid-year. So if you have any questions about whether you qualify under the test, you can actually review something called Publication 54 from the IRS. Now, if you work as an employee for the U.S. government, you typically are not eligible to claim the foreign earned income exclusion. However, if you work as an employee of a private company and perform work under a contract for the U.S. government, you may still be eligible to claim this exclusion on your tax return. So you have flexibility there. And you also have the foreign tax credit or foreign tax deduction. So the foreign tax credit is a method American expats can generally use to offset foreign income taxes you've already paid abroad on a dollar-for-dollar basis. U.S. citizens and resident aliens who pay income taxes to a foreign government or U.S. possession can typically claim the credit, thus reducing their U.S. tax liability and avoiding most double taxation on the same income. So, foreign income covered by the tax credit includes income, wages, dividends, interest, and royalties. And so when taken as a credit, the credit directly reduces your U.S. tax liability. You claim the credit on your tax return and attach a completed Form 1116. And when taken as a deduction, the deduction reduces your U.S. taxable income. You claim the deduction on Schedule A, itemized deductions on your Form 1040. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about taxes for expats. So let's talk about tax treaties. So a tax treaty is a mutual agreement between two countries to resolve issues related to double taxation on income from each other's respective citizens. Tax treaties typically determine how much tax each country can apply to a taxpayer's income, but also to their capital, estate, or wealth. Okay, and it's one of those things where you have to really be really mindful of what's really happening. So what is an income exclusion versus tax credit? So an income exclusion actually works by simply excluding certain types of income from taxation. Pretty straightforward. So what it does is that it reduces how much income is subject to taxes. A tax credit counts as a reduction to your tax liability, reducing your tax bill directly. So income exclusions generally have a greater impact for lowering your tax bill than tax credits because they can exclude all or part of your income from taxation. So this is important. So in the case of the foreign earned income exclusion, you can exclude up to $126,500 of qualified foreign earned income and housing income in 2024. And so it's one of those things where you have to really understand that basically, despite often needing to file a tax return, even while living abroad, U.S. expats don't usually end up owing U.S. taxes due to a variety of tax options that prevent Americans from being taxed on foreign income. So no exemption exists that broadly excludes foreign earned income from U.S. taxation, but the foreign income exclusion, foreign tax credit, and foreign tax deduction can help to reduce your tax bill while living abroad and earning foreign income. So it's one of those things where, again, you got to really make sure that you also have to think about your state tax situation. So, okay, now if you paid more than you owe, whether you're an expat or not, you are generally entitled to a tax refund, but you'll need to file a return to get it. So because you live abroad, you might want to e-file your return and receive your tax refund via direct deposit instead of as a check. Okay, it's one of those things again. So you have to think about how to prepare yourself. So when you leave abroad as a U.S. citizen or resident, you still need to consider the tax consequences back home. Even if you're a U.S. citizen living and working outside the United States for 1 or more years, you still likely need to file a U.S. tax return anyway. Let me give you a bonus here. So it's really important to understand that Americans overseas should really know a lot of things about, let's say, taxes. Okay, and one thing you need to understand is that if you always have to file a U.S. tax return if you're a U.S. citizen, and if you make over the general income threshold, regardless of whether you live abroad or stateside, not a problem. You really always have to file your taxes, okay? And you do not end up owing U.S. taxes because you have a series of functionalities that really help you out here. And it's one of those things where you always need to think about what really works for you, because you are going to be take advantage, if you will, of the FTC, the foreign tax credit, the FEIE. So this is actually the foreign earned income exclusion, and the FHE, the foreign housing exclusion as well. And you need to understand also is that there are some tax deadlines and penalties, okay? So you can receive tax penalties for not filing. And you also have FBAR and FATCA penalties. They can really add up to $50,000 if you willfully don't file. So FBAR and FATCA penalties are steep if you knowingly fail to file. So if you meet the requirements and you are found willfully failing to file an FBAR, you can be fined up to the greater of $125,000 or 50% of the total balance in all your overseas accounts. So it's one of those things where, again, you want to really comply with the law. Don't try to play games at all, okay? And so it's but be mindful of the due date. We're speaking here about April 15th, or let's just say mid-April every single year. And so if you live in a country that has a tax treaty with the U.S., then you are really you're safe. But again, you always need to file your taxes. That way you are in good terms with the IRS, and you always also cover your back, okay? Now, there are taxes for actually for when we talk about the military. I mean, it's important to understand that the military has a special status. And one thing I want to say here is that you need to always think about how to best actually reach your goals if you are in the military, among other things anyway. Let me close to this conversation by giving you a few pro tips. One thing I want to say here is that when you talk about expat taxes, you need to understand that American citizens actually must file a U.S. federal tax return no matter where they are in the world. But they also have the option to actually do things electronically, or even contact the IRS in the meantime. In other words, you don't have to wait at the last minute to start asking questions. Okay, so if you move in the country and let's say you got a job, or you move out from, you just went overseas for love or whatever. I mean, you got the very first thing you need to do here is that you want to contact the IRS to see exactly what kind of situation you really need to comply with, and you have to do the same thing with your state tax authorities, especially if you actually moved mid-year. Okay, and it's also important to understand that you have several options in terms of when you file your taxes. You have several options, including the fact that as an expat parent, you can claim the child tax credit. So this is kind of cool. So, but remember though that expats with dependent children who are U.S. person, so the children must be U.S. person. We're talking about either U.S. citizens or U.S. permanent residents, and they must have actually a social security number. So those parents may be eligible to claim the child tax credit. So this gives parents a maximum credit of $2,000 per qualifying child. So this credit is partially refundable as well, up to $1,500 per child. So this is kind of cool. Now, income limits do apply though. So in addition to the child tax credit, you may be able to deduct child care costs using the child and dependent care credit. However, you must have earned income to use this credit, and salaries and wages are examples of earned income. And if you have excluded all of your income using the FEIE, you will not be able to use the child and dependent care credit that you really would love to have. And one thing I need to say before closing to this conversation here is that you need to understand that the FBAR thing is really, really important. When we talk about the FBAR, that's basically the foreign bank account report. And so you need to actually be truthful. You need to be forthcoming with the IRS and the Treasury authorities about where your cash is at. Thank you so much for your attention. I really appreciate it. In today's conversation, I spoke to you about taxes for expats, and let's quickly do a recap here. I gave you the overview, a bonus. I spoke to you about a few pro tips and kind of helping you out, see a clear situation here, and now the recap. Thank you so much. God bless you. I'll speak to you another time. Until then, remember, stay marvelous.